Be up in a couple of seconds. Sorry about that. Sorry about that, Victor. It should be working right now. Bullish on parade. Hertz. Ooh, I like Hertz. I actually have some Hertz. HTZ. Interesting. Okay. Your high, your low. Look, it's bouncing right there. 434. Okay, we bought a bunch of those yesterday because it just looked good. What about Wells Fargo? Oh, WFS or is it WFC? Let's find out. WFS. Damn it, WFC. Yeah, damn. I was close. All right, Wells Fargo, check it out. The high was back in January, beginning of January. She drops. Look at that movement right there. That looks pretty damn cool. Holy shnipe. I got to get up for this one. Who came up with that one? Thanks, bullish. Now I have to get up. All right. All right, WFC, 83.93. The 84 is going for 161. That's over 2%. Okay. The high, the low, where it was, where is it? Look at this. Up, down, up, down, up, down, up. What do you think? The bottom is right there. Now she's going up. Your 2 days. 1, 2, boom, right there. Either you like it, you don't like it. One or the other. What other questions do we have? Drunk in Hazard. I love peeps and big man just, okay, they see your stop loss and take it. Drunk Hazard, I'm going to agree with you. I never, ever, ever use a stop loss. Never. Never, never, never. Drunken Hazard, but covered calls is better. Okay, thank you. Pro 241, Intel, love Intel. Let's take a look. INTC. Interesting. Let me get up for this one too. You ready? Here's the high of the year. Here's the bottom of the year. Here's where we were a year ago. Here's where we are now. Sideways, up, down. That's basically it. But what's happening right here, right now? Okay, here's the top. Bottomed out, back up, back down. Now she's going up again. 458. The 45's right there. 190, 185. That's close. Not quite 4%, but it's getting up there. But you have to ask yourself the question. Do I like this company? Does it make sense? Down, up, down, up. You either like the company or you don't like the company. It's plain and simple. My music, Gen X, patience. Ban 808. Hey, man, I only have $6,000 cash in my brokerage. Is it worth it to run the wheel with one contract? All right, number one, you're a little on the young side because if you're, okay, anyway, you're just starting out, you got $6,000. $6,000 is better than starting out with nothing. A lot of people do start out with less than $6,000. And I can't tell you what to do and what not to do because I don't know anything about you other than the fact that you're just starting out and you got $6,000 and you want to do the wheel strategy. Okay, fine. There's nothing wrong with it. Okay? But choose wisely. Paper trade first. Because by paper, it's kind of like playing Monopoly. Okay? 4 greenhouses, 1 red hotel. Take your time. Don't be in a hurry. The market has been around, stock market has been around for over 420 years. It's not going anywhere. Just take your time. Choose wisely. All right? So, oh, wow. All those questions have been answered. Well, we got some questions. Holy cow, 99 over there, 61. I got a lot of questions to answer. Let's do this. All right. What else do we got? Michael. How you doing, Michael? All right. Peace, user. Reesington. Fun Kim. How would you like to have that as a nickname? I'm Fun Kim. Yeah, let's go invite Fun Kim. She's always fun to have around. How you doing, Fun Kim? Jeff Edwards, how are you doing? D-Dub, okay. Bloom Energy. Didn't we look at Bloom Energy last night? And didn't we decide it's kind of like going nowhere? Okay, 30-day high, 30-day bottom, up, down. Kind of like just going sideways at the moment. Not quite jumping out, buy me type scenario. Now, don't get me wrong. If you like it, fine. Me, I like a stronger signal. Like this is a strong signal. Bottom, right to the top. Then it comes back down again. That's a strong signal. What else do we got? Phil Futisha. Okay. Donnie. How you doing, Donnie? Bo. Bill Miller. What's happening, Bill Miller? Darwin Arazia. Okay. Matt Fahardi. Okay, Matt. Al Reed. Good Vibes Chi. Okay. David Rodriguez. Pecan. Man Invest. Reversal Trader. Okay. PGT31. Hello. Craig, what do you think about GOOW? All right, Craig, this is what I think about GOOW. I have no idea who the hell they are. Never heard of them. Round Hill Google Weekly Pay ETF. Interesting. It's a weekly payer. So you want to get weekly money, there you go. Now, I don't do these stocks because it's a monthly, which means the options are only once a month. Okay, for the fun of it, let's go to Yahoo Finance and put in GOOW just to see what these weekly payments look like. GOOW. Round Hill Google Weekly Pay ETF. All right. So the stock is $63.65. $63.65 per share. But look at the numbers. 52, 61, 48, 63, 50, 46, 62, 31, 25, 55. No consistency on increasing or decreasing, but it's still paying out. Okay. Well, what was the last one? 55 on a $63 stock. Okay, let's do this. Let's do a few of them. All right. Last week. 0.55 divide 63 equals 0.8. Not quite 1%. Okay. Now, 25 divide 63 is 0.3. That ain't it either. Okay. Yeah, then the numbers just get worse. Because 55 is, 62 is pretty high. But for the rest of them, it's low. All right, well, how often has this thing been paying out? For 1 year? Not even a year? Really? All right, who came up with this one? Oh, Craig. Now, Craig, don't get me wrong. I mean, I have no idea who they are. Okay? But the issue I have with this is it's only been in business since August 2025. Okay, not bad, but if you want weekly cash flow, there you go. But it's only dishing out between 3 to 8, not 0.3 to 0.8. Not 1% though. If you like it, it is what it is. Well, here's an idea. I'm kind of curious. Can you buy it, sell covered calls against it, and still collect the weekly? Ooh, that's an idea. Okay, because they got monthly options and weekly payouts. That might be an idea. That's kind of cool if you think about it. All right, but it's GOOW, and it's not even 2 years old yet. It's not even 1 year old yet. So I wouldn't put my money into a company that's less than 1 year old. But that's me. What do I know? All right, what else do we got? Calvin Hill, Coco, do you teach? Yes, I do. How you doing, Coco? Weston, Wario, good evening. Ryan, how you doing? Craig, what are your thoughts on GeoPay's weekly dividend? Yeah, I saw that one already. Thank you there, Craig. Coco, do I do one-on-one? Yes, I do, Coco. Go to the top left-hand corner. Send me a link in the bio. I'll give you a buzz. 15,000 if I liquidate. Thanks for the advice. Also, do you have experience with credit spreads? Of course I do. Credit spreads, debit spreads, calendar spreads, vertical spreads, four-corner diagonal spreads. Ooh, whole bunch of things. But I like simplicity. Simplicity is a great thing because simplicity only takes 3 to 5 minutes, then I'm done. All right, let's keep on going. What is the delta you're looking at? User 232175479840. Why can't parents name kids normal stuff like Pete, Ted, Tom, Tim, Bill, Biff, Cindy, Sue, Sally? Simple names. All right. What's the delta I'm looking at? I have no idea where you got the impression I was looking at any deltas. I don't look at the delta. It's not important to what I am doing. Okay? Keep that in mind. I'm 62. I have a trading strategy that I've been doing for the past 16 or 17 years. No issues whatsoever, and not once did I ever had the need to look at the delta. Because the stocks I'm looking at is not something I need to worry about. Thank you, Craig. Just some guy. KB2395. Edward Rivera. Afternoon, Edward. Hardin. Would you do a covered call on SOXL? Absolutely. As a matter of fact, I did. I think I bought like, 30,000 of those stupid things. I think at 250. I think I bought them around 250 and I sold the twos. What is the ticker symbol for Mara? M-A-R-A. And it's Mara, not Mira, Mara. Thank you, Craig. Colibri, what's happening? Haven't seen you in a while. Thank you. ASTS. ASTS. Interesting. All right, Craig, do me a favor. Okay, you asked me once, don't ask me over and over and over and over again. Okay, I've already seen it once or twice. I don't need to see it 8 or 9 times. All right. Jannard, we'll take a look at Nike in a minute. ASTS, interesting. Look at the last 30 days. All right. I'm not quite sure how you feel about this one. Check it out. 30 days ago, we're at 92.50. We jumped up to 107.50. We dropped to 77.50. Now we're back up to 106. Now we have some room to run, but not a lot. But we went from 77 to 104. That's $37. That's a 50% increase. So yeah, I won't be doing that one. From here to here is 50% increase. No, thank you. Because I already made the move. So why would I continue to do it? Jannard wants to take a look at Nike and KE. Okay, unfortunately, Nike's in a drop at the moment. Okay, the high. We have a new bottom right there. Now, if you like Nike, I'm going to put it on the list for next week because that baby's going to turn around. NKE. Holy cow. Look at all we got for next week. Look at those. All those for next week. That's a lot to look at. And those don't even have the dividends coming up. That's got to be at least 30. All right. Discussing tropical. Oh, okay. All right, got that one. Just some guy. Thank you there. KB, thank you. Okay, Craig, thank you. Thank you. We did that one already. Did that one. Did that one. Did that one. ASTS, we did that one. We did that one. What's your favorite dividend stock this year? Oh, this year. Well, certainly not Macy's. I tell you how much. You can do it. Thank you there, Pat Yeager. You can do it. My favorite stock this year, I want to say Macy's, but no. It's not Macy's this year. I'd have to do some thinking on that one. Which one have I consistently done every single week? Have you looked at Harley Davidson? Well, let's bring it up. Harley Davidson. Ooh, 3 jumps in a row. Check that out. Now, we said this last night. We're looking at Harley Davidson yesterday. Harley Davidson is a 100-year-old company. Okay, it's the high of the 30-day period. She bottomed out on Monday. Tuesday was higher. Wednesday was higher. That puts me in a perfect buying position because I love a 30-day top to a 30-day bottom. Now she's retracing. That's what I look for. So yeah, I like Harley Davidson. And at 1950, it's going for over 2%. If you like Harley Davidson. Okay. What about DKS? Taco Ida. Nice to see you again. Hey, Christo. How are you today? Break Time Sports. DKS. That's Dick's Sporting Goods. DKS. DKS. All right. Not quite sure what we're going to do here, but I don't do DKS because I don't do monthlies. Months of the year. No. Weekly options only. Rule 4. Weekly options only. Sorry, no DKS. A-Rod. Thank you there, A-Rod. Make money selling options. Lost most of it buying them. Sorry. I don't mean to laugh at your pain, but the only reason I did because I did the same thing. I started out 30 years ago buying options, and I did pretty damn good. Okay? As a matter of fact, I did 124, I think it was, or 125, 124 trades in a row without a single loss 30 years ago. But it was a different ball game 30 years ago. 30 years ago, it was $250 for a commission. So to be a stockbroker, $250 per commission. I remember when it dropped to 1 1/4. It did drop 50% overnight since the invention of the internet. It was cool. So I got to watch the whole thing. I got to watch it go from $250 to nothing. That's where it's at now. It doesn't cost you anything to buy. Let's keep going. A-Rod wants to take a look at ZD. Now just selling, it's boring but effective. Well, user 617-874-8202-973. Let's call you Alfred. Well, Alfred, I like to see that you're coming over to the selling side as opposed to the buying side. Anna Rosa Franco. Hello from the Dominican Republic. I haven't been to the DM, oh my God, 20, maybe 25. Holy shnikey. It's about 25 years since the last time I've been there. A-Rod wants to take a look at ZD. I have no idea what ZD is. Ziff Davis. No. Sorry, I don't do monthly options. See, March, April, June, September, December, January. No. Rule 4, weekly options only. Len Busy. What's happening, Len? Like the shirt? Cool beans, you can have one. Yo, what's happening? Coco, do you teach one-on-one? Yes, I did. You already asked that question. Jay, hello there. We did that one. Masha on Val. Okay, Masha, how you doing? What do we have over here? Okay. Thank you there, Puck. Right. Hold on. There we go. All right. Caught up with the questions here. Cotton wants to take a look at Hewlett Packard March 13, 6.4. Nice. Joshua, how you doing? Nice to see you. So Cotton Express, HPE, huh? Nicely done. Now, we did HPE a couple of days ago. Good for you. DJ Clording. Okay. DJC Lord King. Okay. Interesting. Which one? HPE. There we go. Okay, so HPE. Interesting. The high, the low, where was it, where is it? All that kind of nice, neat, fun stuff. Let's take a look. You ready? The high, 26.50. The low, 12. Can you imagine that? It goes from 12 to 26. That's 100% increase. What is your point on difference between monthly and weekly? Oh, shit. There's always somebody that asks, why monthlies, weeklies? Okay, hold on. We're going to get to that in a second, all right? Sit tight. All right, here's the bottom. 100% increase, down, up, down, up, down, up, down. Okay, whatever. Here we are right here, 21.55 to 21.50 is going for $1. $1. $21 stock has an option that's selling for $1. That's almost 5% for 1 week. Of course, you gotta like Hewlett-Packard. Okay? Okay, Cretan 504, ASTS had it since $13. Now, you do know, in case nobody's ever told you, okay, Cretan, it's not a profit until you take it. And if you don't take it, don't be surprised if the market maker takes that profit away from you. Seen it happen many times. I've been playing this game long enough. All right, so it looks good. The retracement there, not bad. But do you like Hewlett-Packard? Well, I like Hewlett-Packard. 30 days ago, this is what we're looking at. 30-day high, dropped to the 30-day bottom. Now she's going back up again. You either like it or you don't like it. It's actually that simple. Mr. Mike's in the house. Mr. Mike wants to take a look at Albemarle, ALB. Let's take a look. A-Rod, you're welcome. Okay, A-Rod, we're going to take a look at the weeklies and the monthlies in 1 second. Take a look at Albemarle first. Ooh, that's a tough one. Bottom's here, top's there. Shoots up, pulls back. Not quite the right time for Albemarle. Now, don't get me wrong, I like Albemarle, I do. But not this week. Okay, 30-day bottom, shoots up, pulls back, new 30-day bottom. Now she's bouncing off of that. So the 168s, that's a nice return right there. If you like Albemarle, it's always going to come down to that. It is. All right, so A-Rod wants to know the difference between a weekly and a monthly option. Other than the obvious, okay, monthly options you can do once a month, 12 times a year. Weekly options, I can do 52 times a year. So let's just get a rough idea, okay? So this here, Albemarle, is a weekly optionable stock. 6 March, this week. 13 March, next week. 20 March, 3 weeks out. 27 March, 4 weeks out. 2 April, 5 weeks. 10 April, 6 weeks, so on and so forth. Every single week, there is a new weekly option. That's why I like weekly options every single week. Now, a monthly option, we're going to get that in a second, but let's take a look at this. Now, current price, $168.35. The closest strike price is going to be the 167. It's paying $7.55. So, for the fun of it, because this is the ones here, let's pull it up. Calculator, are you ready? Okay, so the current price right there, $7.55 is the premium. Okay, now I'm not pulling numbers out of my, colorful scenario. The current price right here, 171. So the closest one is going to be right there, 755. It's right there, the number, 755. So we're going to divide it by the purchase price, 168.35. Divide 168 35 comes to a grand total of, okay, A-Rod, you ready? Okay, this weekly option comes to 4.4% for 1 week. 1 week, okay? Now, let's go take a look at a monthly option. Let's take a look at everybody's favorite, O Realty. Okay, here's O Realty. Here's the high, the low, where was it, where is it, blah, 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 all that nice, fun stuff. The current price is $66. So let's take a look at the very next option. Okay, how do you determine your strike? Now, bands, you're going to feel really silly about this. I mean, really, really, really silly about it. Okay, you ready? Here you go. How do I choose my strike price? If I'm buying the stock at $66, the closest, safest strike price is going to be $65. It's the closest and easiest one. Or I can do the $67.50. But the $67.50, the stock has to go up, which means it has to perform. So I wouldn't do that one. I would do the one lower. Okay, 66. The closest one's going to be the 65. It's 220. Okay, now, if I buy it at 66, sell it at 65, I'm losing $1 right off the top. So you take the $1 off there. Now I'm walking away with $1.10. That's it. $1.10. So let's do the math. Okay, profit is $1.10. And how much is it costing me? Well, not 66 because we subtracted the dollar already. We're going to do the 65 because we already subtracted the $1. Okay, divided 65. And that equals, A-Rod, are you ready? That equals 1.69 for 44 days. So I can get anywhere between 1 and 3 to 4% every single week, or I can get 1.69% for a month. The numbers just don't work. I very, very, very rarely ever found a monthly option that was actually profitable. But here's what's worse about monthlies. Okay, that's just one. The number's just terrible. That's just one. Here's another one. You ready, A-Rod? That's the year chart right there. Okay? Let's look at 30 days. 30 days. $30 would be 2.4 right there. All right, A-Rod, you see this? Okay. 30-day high, 30-day bottom. Follow along if you will. Up, down, up, down, up, down, up, down. That, A-Rod, right there is 30 days. Now, tell me, where do you think it's going to be in the next 30 days? Because, see, a monthly option, we know what the current price is. Now we're trying to figure out where is it going to be in the next 30 days. So that right there is 30 days. Up, down, up, down, up, down, up, down. It's not that easy trying to pick where it's going to be in 30 days. However, trying to pick where it's going to be in the next 5 days or next Friday, well, here's the bottom, here's the top. It looks like it's coming down. But how much is it going to come down? Now, it might come down for 5 days, but it's definitely not going to come down for 30 days. See, it's easier to find out where a stock's going to be in 5 days than where is it going to be in 30 days. It's simple. And then you're taking a look at the rate of return. The rate of return on a weekly basis is anywhere, let's say 1 or 2%. 1 or 2. So at the end of the year, that's 50 to 100% at the end of the year. Well, let's look at the other way. Monthly options. Let's say we get 1 or 2% on a monthly option. That's 12 to 24% by the end of the year. I'm terribly sorry, but the numbers are just more in favor of the weekly options as opposed to the monthlies. So I just don't do monthlies. It's just not enough money in it for me. All right, let's take some more questions. All right, what do we got? Okay, Ben, hope you understood that, how quick, how easy it is to take a look. New Jersey Forerunner, James taught me everything I know about options. I'm not quite sure if that's good or bad, but I'm glad it's working out for you. All right, what else do we have over here? All right, ASTS, we already looked at it. David, how you doing, David? Thank you. You're welcome. We did that. Oh, SZ Trades, how you doing? Hey, Ron, what's the point of weeklies, monthlies? Got that one. Thank you. All right, thank you very much. I see your point now. Okay, hopefully I won't have to do that again. Goal is to ID stocks with weekly options, determine when to buy and how long to hold. 1 week. Yeah, that sounds about right. Kirby, what is your average investment value? My average investment value. I'm not quite sure how to answer that because remember, I got like 7 different accounts that I take care of. You can buy your options monthly. You can sell whenever you want to, then buy it again. Yeah, but why? Why would I do monthlies? It just doesn't work out right. Well, I see it's more than percentage. Yeah, it is. It's more a percentage thing. I make more money doing weeklies than I do monthlies. Now, I understand the concept of doing monthlies because you don't have to do it once a month. Okay. I'm retired. I don't really mind 5 or 10 minutes every single day. Go 5 or 7 minutes, I take a look at what my account is. I get 5 simple questions. What did I buy? What did I sell? Where is it at now? Where does it look like it's going? What should I do? That's it. What did I buy? What did I sell? Where's it at? Where does it look like it's going? What should I do? Forget average value. What would be your minimum investment? Whatever gives me a 1% weekly basis. Now, you got to remember, I look at stocks anywhere from $2 all the way up to $400 because I don't buy anything over $400. To me, it's just, I can make 1 or 2% on a $5 stock just as well as I can make, 1 or 2% on a $1,000 stock. I just don't see the point. 1% is 1%, man. That's where you look at it. James, hear me out. Amazon options 3 days per week, Monday, Wednesday, and Friday. Now, it goes against your rules, but it's working for me. Awesome. Let's take it up. Amazon. AMZN. Now, Forerunner, I don't tell people what to do. I'm just showing you what I do. And that doesn't really mean anything other than it's basically just what I do. Okay? So, let's take a look at some of these. You can't call them dailies. Tri-weekly. Ooh, there you go. Tri-weeklies. 3 times a week. Tri-weekly. Ooh, that's a good one. What do you think? New Jersey Forerunner. Can we call them tri-weeklies? Because they do it 3 times a week? All right. So, we're at the 4th. So we got one expiring the 4th, which is tomorrow. Sure. Okay. The tri-weeklies. Okay, so 4/26 was today. That one expired. So 6 March is for Friday. Okay. All right, here's an idea. All right, let's take a look at this. All right, now Amazon's in a great position for this, by the way. All right, at this moment in time. Okay, the high is 240 in the last 30 days. It dropped down to 196. Now we're back at 216. So down, up, down, up. Okay, so she's going up. 216.87. 82, sorry. So if I buy it tomorrow morning at 215 and I sell the 215s, I walk away with 345 between tomorrow morning and Friday. A-Rod, so let's say you buy option Monday. There is no way you're going to hold it until Friday. It will lose value. You know, A-Rod, I'm going to agree with you 100%. I'm agreeing with you 100%. But let me explain the flaw in your logic, okay? Because you have a tiny bit of a flaw in your logic with this scenario. You ready? I don't buy options. I sell them. I actually want them to lose value. So if I buy the stock on a Monday, I sell the option on a Friday. Whether the stock moves or not, totally irrelevant. So let's say the stock doesn't move at all. The value of that option will slowly deteriorate to nothing. That's what I'm looking for. Okay, if the stock drops, not a big deal. I still bring in my profit, and the next day, or I should say the next week, I will sell another option. You do iron condors. Now see, I could say yes, I could say no, but I don't do iron condors. Okay, now I've been doing this for a very, very, very long time. An iron condor is not a 2 or 3 minute trade. Okay, buy, sell, simple, easy, in, out, done, over with. Iron condor, I'm sitting there chilling out, relaxing, and then, take a little longer. Enza, I see you. How you doing, Enza? Thank you. So A-Rod, there are a lot of different trading strategies out there. I only concentrate on about 2 or 3 of them because they're simple, they're quick, they're easy, and they give me a consistent 1% or more every single week. So that's what I concentrate on. Simplicity, predictability, profitability. There's a few other leaf families I like there. So anyway, back to you, New Jersey Forerunner. Now, Amazon doesn't have any dividends. So we don't know if Amazon is even profitable. Okay, what we would have to do is to go and look 10, 15, 20 years of quarterly reports and annual reports to see, is this company profitable or not? Well, I saw an interview with old Jeffy Boy a while ago, and it's not a profitable company. It brings in a lot of money, but they don't share any profits, and it's not as profitable as you think they are. Anyway, besides the point. So I forget what the hell I was talking about. So anyway, yeah, I don't trade Amazon because the reason I do dividend stocks, here we go. Where are they? There we go. Okay, this here is an EX dividend calendar. It's just a regular calendar, March 2026, with the dates. Today's the 4th. Okay, but this has a bunch of green dots on it. See all these little green dots? Well, all these little green dots represents companies that increase their profits in paying out a dividend. Well, if the company has a dividend and it increases year after year after year, well, those are the companies I like. I've been learning options only 1 or 2 months. Thank you for all your answers. All right, A-Rod. A-Rod, here's a statistic for you. I'm not quite sure whoever's teaching you has told you or not. But a majority of all options expire worthless. See, that's why I don't buy options. I sell. They're simple, they're easy, they're predictable. All I'm doing is buying a good company and just riding it as it goes up. So back to your question. The reason I only do dividend stocks is because they are predictable. Remember what I said earlier? Simple, safe, predictable, and consistent. Okay? Simple. The covered call is one of the easiest strategies there is. Okay? Simple, safe. The covered call trading strategy is so safe, the federal government allows you to do it in your IRA. Certain trades you cannot do in your retirement account. You can do this in your retirement account. Coin's going to be a no. Okay, hasn't been around for 20 years. Doesn't even have profits yet. 3, predictable. Simple, safe, predictable. Now, the reason I say predictable is dividend stocks pay a dividend. All right, I gotta explain this one to you because it might lose you here, okay? Now, a dividend stock shares the profits with the investors. That's you and me. We are the investors. If the company is profitable, we get a share of the profits. That's the reason I like dividend stocks, because I want cash flow. Now, a dividend stock will pay a dividend the same day or the same week, year after year after year. So here's something very important for you to understand. There's 365 days in a year, 12 months, 52 weeks, 4 quarters. January, February, March, April, May, June, July, August, September, October, November, December. SCHD King, really, seriously? Check out the numbers and check out how consistently profitable SCHD is. Let me know how many years consistently they have increased, then come back and we'll take a look at it. Until then, I'm going to wait to hear from you. Okay, King? SCHD. So, 4 quarters. January, February, March, April, May, June, July, August, September, October, November, December. Here's the thing. Each quarter, 4 quarters, each quarter has 13 weeks. Every single quarter. First quarter, 13 weeks. Second quarter, 13 weeks. Third quarter, 13 weeks. They each have 13 weeks. And here's the interesting thing. The first week of the first quarter looks the exact same as the first week of the second quarter, which coincidentally, the exact same as the first week of the third quarter and the first week of the third. They do the same things over and over and over and over again every 13 weeks. So think about it. If I like Seagate, Kohl's, Humana, Walmart, Home Depot, if I like any of those companies, we're in the month of March. So, holy cow, in the month of March. Here's April. That's the first week of the second quarter. So this is week 13, week 12, week 11, week 10, week 9. So we're in week 9. 9, 10, 11, 12, 13. Okay, so we're in week 9 right here. So every 90 days, all of these companies, we got McDonald's, Goldman Sachs, DuPont, McKesson, Nike, Harley Davidson, Lockheed Martin, NEM, Newmont, CL, Colgate-Palmolive, WDC, I don't know that one. Anyway, every 90 days, same companies over and over and over and over again. Repeatable, simple, safe, predictable, and consistent. Consistent every 7 days. Every 7 days, there's an option. A-Rod, sale, buys, and sells options are more risky. What people said me, so I buy options just to learn. Okay, now A-Rod, I'm not telling you what to buy. I'm not telling you what to sell. What I am doing is I'm telling you what I am doing. Okay, whether you choose to listen to what I say or not, that's up to you. Okay, you should never blindly listen to any bonehead online. And that's me. Yep, bonehead. Okay, I'm just sharing what I'm doing. I'm creating what's called a video diary for my children and my grandchildren. So when I'm gone, they have something. Hi, guys. They have something to watch and understand. Okay, stereotypical Shay. 13 weeks every quarter explains why 13 EMA feels so consistent. Whoa. Thank you there, stereotypical Shay. That does make sense. Okay, so as I was saying, the reason why I like dividend stocks is because it tells me exactly when they're going to pay their dividend. Right there on the calendar. And what can I do with that? Well, over the years, I have found that stocks have a tendency to go up in value just before they pay their dividend. So knowing when they pay their dividend gives me a little tiny bit of an edge. So that little tiny bit of an edge, well, great. Now I know when they're going. So by knowing when they're going to go up in value based on the dividend, now I got to pick a trading strategy that's simple, safe, and easy. Well, great. That's the covered call. And the nice thing about the covered call is I know what my profit's going to be before I even do it. And by knowing what my profit's going to be before I even do it, I know what my rate of return is going to be. So I don't have to wait for the stock to move. The price and the time frame is already built in. So whether you like it or not, whether you agree or not, Friday is coming. Friday, at this moment, is 2 days away. And guess what? After that, there's another one coming. Okay? This one, 2 days away. After that one's done, look, there's another one. After that one's done, holy cow, there's another one. After that, boom, another one. And then we are in quarter number 2. It's coming, whether you like it or not. Joshua, do you try to collect the dividend or not, or does it matter? Joshua, that's a great question. No. Hold on, I'm going to tell you something. Kirby, what about monthly dividend companies? They supposedly drop days before. No, Kirby. Dividend stock companies have a tendency to increase before the dividend date. Okay, you got 4 dates to remember. Hold on a second. Okay, you ready? Okay, Kirby, 4 dates. Date number 1, the announcement date. Okay, that's when the spokesperson comes out and says, good afternoon, everyone. This is Dan from Dividend Stock Talk. This is how much money we made. This is how much you think. This is how you're going to get yours. It's just the explanation date. It's like, what did they make? How are you going to get yours? It's the first date. Date number 1, the dividend announcement date. Date number 2 is the important date. That's called the EX dividend date. That is the last day the stock trades before the dividend is paid out. So if you're looking for the dividend, you got to buy it before the EX date. Okay? The EX date right here. Look at this. Campbell Soup, Cisco, NTAP, Cisco, American Express, Bristol Myers Squibb, first week of the quarter. Comcast, Cardinal Health, first week of the quarter. Nucor, PCG, Mandalese, Illinois Toolworks, John Deere, the last week of the quarter. Okay? Right there. This is the last week of the first quarter. Last of the first quarter, right there. The first of the second quarter, right there. They do the same things over and over and over again. So knowing when they're going to pay their dividend, great. So let's go for hypothetically. You ready? Okay. Now, if I wanted to get the dividend for Walmart, which is right here on the 20th, I don't want to buy it, the day before. I want to buy it 2 weeks before to give it time to move. More specifically, 2 weeks on a Monday. Okay, so I want to collect the premium, 1%. There you go. If it hits my target, great, wonderful. If it doesn't, I do it again. Another premium right here. If it hits my target, great. So I got 1% here, 1% here. Look, I do it again, 1% here, and I collect the dividend. If I don't hit my target price. It always comes back to that. So, do I try to collect a dividend? No. It's just a happy coincidence when it happens. All right. Thank you there, Enza. Christo, thank you. So what else do we have here? Cotton. Hopefully that works out for you, brother. Phil, thank you. The sum of 2. Okay. David, PBR. Isn't that peanut butter and raspberry? PBR. Isn't that, I forget exactly what it is. Some Brazilian. I think it's Brazilian. PBR. Petro Brasilia. It's oil It's a Brazilian oil company. Yeah, I don't buy anything at the high. Sorry. Just going to be a no. Sorry about that. Dro, before you retire, what did I do? Oh my goodness. You know what? I'm not quite sure because I did so many jobs. From my very first job to my very last job, I've done so much. Okay. So most recently, before I retired, I was a handyman. I could basically fix anything. But before that, I was in the hospitality. I was a waiter. Good afternoon. Would you like coffee or tea? Blah, blah, blah. I was pretty good at it. I like doing it. I did a lot of weddings because I was server at weddings. What else did I do? Handyman. I owned my own manufacturing company. Actually, that's one of my hobbies right now is I plan on manufacturing some stuff in my retirement days. Love your plan. Thank you there, Darwin. The sum of two. Yes, thank you. Thank you there. All right, what else do we got? David Carroll, how are you today? T, thank you. Oscar's house, always a pleasure. Crypto Granddad, you and I got to chat, dude. Seriously. I'm a grandfather, and I am creating my own cryptocurrency. Yep, you heard me right. I don't buy and sell crypto, but I'm creating my own crypto. You and I need to chat. Brat Gray, what's happening? PRP. Univision, yes, you can. Yes, you can. Brad Gray, good afternoon. Cale Bowers, good afternoon, Cale. Not today. Univision, we can't see. What are you looking to see, Univision? Aiden, afternoon. Bensom. Drunken Hazard. But you have to have the shares to do a covered call. Yes, you do. Or, not necessarily so, Drunken Hazard. It would make more sense for you to do covered calls to own the shares first. But you could do what's called naked covered calls, just selling the calls. It's basically almost like a cash secured put, but it's a cash secured call. You still got to put the money up, okay? Because they don't allow you just to buy and sell stuff without having some collateral to put behind it. Yes, 100 shares per contract. Yep. What was the strike? Whatever's closest. Dr. Jason, love it. Glad you do. McDavis Dorvillier. Okay. Mac Davis Dorvillier. Okay. Blued for 20. I don't completely understand options yet. No guarantee you will be able to sell the option, right? No. All right. That's a good question there, Mr. Blue. Let me briefly discuss with you one thing, okay? Make it a little easier for you. Okay, this over here, okay, this is called the option chain. Okay, all the strike prices, all the strike dates. Okay, we're looking at 6 March here. Here's 13 March, 20 March, 27 March, 2 April, so on and so forth. Now, options are either call options or put options. Okay? And the increments are whatever they are, depending on the price. Some of them are 50-cent increments, some are $1 increments, some are $1.50 increments, some are $2.50, some are $5, some are $10, so on and so forth. They all differ depending on the price. So, $16.77, it's going to have a 50-cent increment. $4.50, $14.50, $15, $15.50, $16, $16.50, $17, $17.50, $18, so on, so on, so on. The current price right now, $16.77. The closest strike price is going to be the $16.50. Okay, it's actually that easy. It's not that difficult. Okay, so the option is the right to buy at a certain price, strike price, by a certain date, expiration date. 6 March, 13 March, 20 March, so on and so forth. Okay, they have weekly options every 7 days, or they have monthly options every third Friday. Okay, an option is relatively a simple scenario. You ready? Let me give you a brief example. Let me see if you understand it. Okay, blue 22, a 420. Let's say hypothetically you get an old car in the backyard. Let's call it a 67 Nova. 67 Nova in your backyard. You push it out to the front yard, clean it up a little bit, wash it, spit shine tires, stuff like that, whatever. Slap a for sale sign on it. Great. Let's say Pete, the neighbor, comes over and says, hey, Blue, I like your car. Let me give you a couple $100. Hold it for me until Friday. Now understand, the hold it for me till Friday comes with a deposit. The deposit is a non-refundable deposit, and it doesn't come off of the price. It's just hold it for me. That's all it is. So your neighbors either come back on Friday, give you the money for the car, boom, all done. But let's say he doesn't. You keep that money he gave you, that non-refundable deposit. Wonderful. And let's say Tom, 2 towns over, says, hey, I saw that car you had. Let me give you a couple $100. Hold it for me till Friday. Same scenario. He gives you a little bit of money up front. Great. He comes back on Friday, gives you the right. If he doesn't, you sell it to another person. Phil, the mechanic, the guy who screwed you the last time he did your tires. Yeah, that guy. He comes by and say, hey, I like your car. Sorry about your tires, but I like your car. Let me give you a couple $100. I'll come back on Friday and pick it up. You can do that every single week. You own the asset. The asset is yours. The car that was in the backyard, you push it out the front. Great. It's yours. You own it. You can do whatever you want. You're selling somebody the right to buy it, not the obligation. They don't have to buy it if they don't want to. But you can collect a non-refundable deposit from every single person, one at a time. Okay, you can't sell it to 2 people at once. Okay, if you have 100 shares, you can only sell 1 covered call against it. So, if I buy this one, 1677, it's mine at 1677. I would turn around and sell it to whoever. At this moment, it's going for 47 cents. Now, here's the thing. This is important, Blue. You ready? If the number is posted right here, that is the sales price. So if you go into the local corner store, 7-Eleven, Quick Stop, Quickie Mart, Circle K, whatever, you go into the local store, corner store, you can buy a gallon of milk for $3.50. It's yours to buy. You cannot go to the farmer and buy a gallon of milk from the farmer for $3. Only the market maker can. The market maker, he's the owner of the store. He buys that milk for $3, sells it to you for $3.50. It is what it is. If he posts it for sale for this price, he's required by law to fill it at the market price. However, you have your choice. Okay, here's your sales orders. I'm going to open this up so you can see it better. I'm just going to make it larger so you can see it. Come on. You ready? Hold on. There it is. Wow, that's tiny. There we go. All right. Okay. These are all the orders that you can do. You can do a limit order, which means this is what I want to pay. I don't want to pay any more. I don't want to pay any less. Limit order. Okay? You can decide what you want. A stop order means this is what I want. Don't go any further. A stop limit. Basically the same thing. Okay? A trailing stop. As the stock goes up, the stop order will follow it up and keep a distance between the sell order and the trailing stop. Because as the stock goes up, the trailing stop follows it. And when it turns around, it stops out. You can do that one. A trailing stop limit order, a walk limit order, an MOC, that's market on close, an LOC, that's a limit on close. Okay, so you can do it any order that you want to do. It just doesn't mean market order, it's going to fill immediately. You don't get to choose what price it's going to be, but it does fill immediately. Limit order, well, the market maker can choose it or not because you're telling him what to do, and he can always say, yeah, no, thank you. All right, so let's get out of that one. Is what it is. So hopefully I answered that question. Do you have to own the shares to sell options? No. The smart ones listen. Thank you there, Pat Yeager. Okay, so blue, hope that made some sense to you. Kimberly, what happens when the expiration date passes and the option doesn't sell? It goes to zero. Okay, so if I sell this one right here, 1650, it expires on the 6th of March. So whoever buys it, remember, I'm selling. So whoever buys it from me has between when they buy it and when it expires. 6 March 26, which is this coming Friday. So whoever buys it has between when they buy it and the expiration date. If the expiration date passes, the option expires worthless. And almost all, about 80% of options expire worthless. And Colin, you're right, sell covered calls. To sell covered calls, you got to own 100 shares first. Soundhound or Navitas. Well, I'll do it tomorrow because we're past 11. What other streaming services are you on? I got 9 different channels that I'm on, and it's past my bedtime, so I'm done for the night. Johnny, what are the 4 you have so far? I just tuned in. Hold that thought, Mr. Johnny. Here we go, Mr. Johnny. Actually, we got 5 of them today. There they are, Johnny boy. IBM, Adobe, Macy's, Mara, and Oracle. They are not tips. They are not advice. They are more or less observations. You guys gave me stocks to look at. I looked at them, put the numbers up there, and that's it. Go GC next. I have no idea what GC means. Topher, how's the boat? Actually, we went on the boat yesterday. I had one of the bilge floats. Yeah, it went bad and just stayed on and killed one of my batteries. So, had to get a new one, put a new one in. There's a few more things we're going to do to it. Then we're going to turn around and sell it only because I want an electric boat. I don't want a big diesel. And it has nothing to do with the price of the fuel either. I don't mind that. It's just that when you turn them on, the whole thing freaking shit like a tractor. It's like I'm on a tractor on a, yeah, no. Besides, I have my eye on a different boat, convert it to electricity. That would be cool. All right. Thank you there, Topher. Passport Eric, I took the trade on Oracle this morning, made 971, 6.3. Only thing is, earnings are on the 10th. Okay. Now, Passport Eric, you said you did the Oracle trade this morning. Now, did you do it for this week or did you do it for next week? And here's another thing. If the stock goes down, you just keep it and sell covered calls until it hits your target. Okay, user 7440306169 Qs. Yeah, no, thank you. They're just not profitable. And don't start arguing because, I've been doing this long enough. My idea of profitability and yours is probably 2 different things. Let's keep on going. Do you have to... Oh, yeah, we already did that one. Oh, wow, we're done with questions there. Okay. What else do we got? MCD Green. We'll take a look at McDonald's tomorrow. Also selling 100%. Also is not extremely viable strategy all the time. Thank you, Magic. Especially in profit. I'd like you to clarify that because it doesn't make 100% sense. Okay? Also selling 100% also is not extremely viable strategy all the time, especially in profit. See, I have to come up a little bit more on that one. Drunken Hazard, thank you. Colin, dollar cost averaging still remains the most effective way to build a bank. Okay, thank you. Depends on what you invested in. Okay. Actilis is an example. All right, thank you. I go for 1% daily. Take T-Wizzy, good for you. I don't. I have no desire to sit in front of my computer all day long. No, thank you. I could. I have no desire. Jimmy Rice, what's happening? Money Mark, Hormel, look at it tomorrow. Thoughts on acquisition of K-View with Kimberly Clark acquisition. I'll have to look at it tomorrow. Already past 11, I'm done. The One, thanks for learning every day. You're welcome. Tasha T-Top, what's going on, Tasha? Christy M, hi. Have you checked? Christy M, I just missed it. Where'd it go? Wow. All right, right there. Christy M, have we checked Walmart already? No. Andrew, what's up? How you doing? PJCA, June 47. Verizon, we'll talk about it tomorrow. Paul, weekly options, absolutely. Amanda, good afternoon. Nate, Yext. What the heck is Yext? Is that a combination between yes and next? Y-E-X-T, Yext. Hell no, I don't do monthlies. Target was good for me this week. Ooh, Target. Interesting. Definitely time to get rid of it, though. Look at that jump. Yeah. All right, that one could turn off. Mr. Mushroom, how are you today? Stens, how much starting capital do I need to execute your greediest contracts at 2% total port value? Stens, I have no idea who you are. I have no idea what your goals are. I have no idea how old you are. I know absolutely nothing. So me giving you any kind of advice whatsoever, not a good idea. And no, I'm not going to do it. Jay Corey, what if up you leverage? What if up you leverage? I'm reading it right. It just doesn't sound right. Puerto Rock. What is whitelisted? Oh, that's an interesting question. Okay, thank you. Can we look at GIVO next time? Not a dividend. Thank you. Do you do covered calls? Absolutely. Jobra Shoe Laundry. Cool. What is my thoughts on NVIDIA will go, I don't even do NVIDIA. NVIDIA, it boggles my mind. Okay? You're overthinking this, bro. Absolutely. Thank you, Joe. Jay Corey. No, he's not overthinking. Thank you. WDC's Western Digital. Oh, got it. Jay Corey, trying to teach something. Thank you. Ishmael. All right. Jay Corey is perspective. Correct. Perspective and context. You forgot that one, Jay Corey. Perspective and context. Ben B, can you go over Oracle? We already looked at Oracle a little while ago. Okay, just go back and watch the video over again. It's going to be up on YouTube a little bit later on, and you'll see Oracle on there. Medici. Anybody who with the name Medici is asking if you're a millionaire. I know who Medicis are. Jay Corey, KD, Aaron Jones, the sum of two. Okay. Do you do cash secured puts? Once in a while I do. David Carroll, awesome, thank you. Enza, thank you. Joe, Colin, Mitch. Trizidora, what is the spot? What is the bid and ask? Well, the bid and ask, it depends on what we're looking at. Right now, we're looking at target. It's 119.55 by 200. I'm sorry, by 120. That's a big spread. Yeah, no, it's not. 119.55 over 120. It's not that bad. It's like a 45-cent spread. That's kind of a big spread, though, especially for target. Sayuna, how are you? Crystal Johnson, how are you? New Jersey, 78. I sold 150 strike on Oracle. Should I roll my position? ORCL. Well, John Bohe, James, buy 200 shares of stock, sell one put that yields 2%. So you have 100 shares covered. Okay, so John, I'm not 100% sure what your strategy is. No, I understand what you're doing. You're going to buy 200 shares, okay? And then you're going to sell one put that yields 2%. So you have 100 shares covered. Not really. Okay? Because you can sell a covered call on those. If you sell one call option, yeah, you're covered on 100 shares, not on the whole. All right, that just, I want to hear your thinking, John, okay? Because the way you wrote it, it doesn't quite make sense. Oh, there you go. You sell one call that yields 2%. So you have 100 shares covered. Yeah, but what are you going to do with the other 100? And then why would you only do one, not two? See, I don't know what your goal is. Because see, my goal is a consistent 1% per week. That's my goal. All right, what else we have here? Are you tired this evening? Hope you rest well. Thank you, Sam. Yes, I am getting tired. I'm having a hard time focusing my eyes. But we're almost done here. What happens if the stock goes below your strike? You change your strike price. Now, Abu, we look every single day. What did I buy? What did I sell? Where's it at? Where's it going? What should I do? Every single day. So as the stock moves, I can see what's going on. How many covered calls how many covered calls you can sell on a stock you bought? You can only sell one per 100. So if you have 100 shares, you can sell one covered call. Stens. I'm reading it right. It just doesn't sound right. Yeah, I'm agreeing with you. I'm reading it right. It just doesn't sound right. What is covered call me? What is covered call me, David? I have no idea what the hell that means. I mean, I understand the words. What is covered call me, David? Okay. Cam. Trade, not trake. Sorry. Okay. Earnings next week on Oracle. Of course I play the earnings. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. Mr. Okay. That still doesn't make any sense. What is covered call me, David? Thank you, New Jersey. All right, that being said, I'm having difficulty focusing. Didn't get enough sleep last night. That's probably what it is. Other than that, we're going to do this exact same thing all over again tomorrow, every night, Sunday, Monday, Tuesday, Wednesday, Thursday night. I take Friday nights off, and I take Saturday nights off. John Bohe. So I'm getting 2% on 100 shares and letting the 100 shares for capital appreciation. John, that does make sense. I don't know why you do that, John, but hey, it is what it is. Gee, you have to own the shares. Yes, you do. Good night. Thank you. You're welcome. Passport Eric. I've been selling Intel for 3 weeks straight at 47 strike until it's called. It's exactly what I do, Eric. I take a look. What did I buy it for? What's the most logical one to sell against it? What am I collecting? Where's it going? What should I do? Every single week. You're getting it, Eric. Way to go. Way to go. Way to go. Woo-hoo-hoo. All right, that's it. I'm done. I'm out of here. You guys have a great day. We're going to do this all over again tomorrow night. 9 p.m. Woohoo! Let's do this. You guys over here have a great night. Sorry about the Able model, dude. Just didn't work out this week. And now, the end is near. And so I face the vinyl curtain. Yep, that works. All right, out of here, out of here, out of here, out of here.